Norfolk, Virginia isn't just another coastal city, it's the economic and cultural heartbeat of the Hampton Roads metro area, a region home to over 1.7 million people. We are looking at a market anchored by the largest naval base in the world, Naval Station Norfolk, which provides a bedrock of economic stability and a perpetual engine for rental demand. However, despite this massive employment base, the submarket is facing a significant rent gap. When we look at the subject property 171 to 179 West Balview Avenue, we see the current weighted average rents at $1,176, while the market potential is proving that $1,360 is achievable. Now, this loss to lease represents a significant leak in the current ownership's balance sheet. Nearly 7.3% in gross rental profit is being lost and left on the table today. Today, we are presenting a 20-unit asset built in 1987 that serves as a perfect vehicle to capture this market growth. By aligning these rents with the market and capitalizing on regional infrastructure development, an investor can drive this asset from 6.75 current cap to 7.8% yield in year one. Chapter 1, the location, the infrastructure multiplier. The most critical part of any investment is the why here. This asset is strategically positioned near the region's largest economic drivers. Employment centers, this location offers easy access to numerous employment hubs. You're within 10 minutes of Norfolk International Airport, the regional IKEA, and the Simon Premium Outlet Mall. The military anchor. The property sits in close proximity to Naval Station Norfolk. This base provides consistent demand for rental properties from military personnel and related industries. The shipyard powerhouse. Nearby is the Norfolk Naval Shipyard in Portsmouth, one of the oldest and most significant shipyards in the U.S. It is responsible for the maintenance, repair, and overhaul of the Navy's fleet, including aircraft carriers and submarines. Job stability. As one of the region's largest employers, the shipyard provides jobs to thousands of citizens and military personnel, generating income that supports local businesses and housing. The $3.9 billion HRBT expansion. A massive transformation is underway. The Hampton Roads Bridge Tunnel HRBT expansion is a $3.9 billion project aimed at improving connectivity between Norfolk and Hampton. Completion is set for spring 2027, which will drastically improve the local transit. Major private development. We're also seeing a significant private investment, such as the 350 Atlantic Park Surf Park, backed by Pharrell Williams, and the 340 Million Rivers Casino in Portsmouth. These projects are creating thousands of jobs and driving tourists. Chapter 2, asset quality. Vintage and physical upside. This is a high-quality 1980s vintage asset that allows an investor to avoid the pitfalls of older construction while capturing a renovation premium. The structure. Built in 1987, the property consists of two-story brick buildings situated on approximately 0.24 acres. The unit mix. The asset features a desirable unit mix of 20 total units, 8 one-bedroom, one-bath units, and 12 two-bedroom, one-bath units. Spacious floor plans. The property offers a total 13,600 square feet with an average unit size of 680 square feet. Specific sizing. One-bedroom units average 650 square feet, while the two bedrooms offer 700 square feet of living space. Physical condition. As you can see, the interiors feature modern flooring and open concept kitchen areas with updated cabinetry. This quality level is highly competitive, but there is still room to modernize and push for the market-leading rents we see in the pro forma. Transit-oriented. The location provides easy access to I-64, I-264, I-564, and Granby Street, making it ideal for commuting workforce. Chapter 3, financial upside, capturing the loss to lease. The numbers tell a compelling story of untapped potential. The list price is $2.699, which breaks down to an attractive $134,000 per unit. Current performance. The asset is currently operating at 6.75 cap rate with a gross scheduled rent of $282,000. The year one target, by moving rents to market levels, we project the year one gross rent schedule to hit $326,000. NOI growth. This transition moves your net operating income from $182,000 to $210,000, an increase of over 15% in just the first year. Returns. With a 30% down payment of $809,000, year one cash on cash return is projected to reach 8.77. Total return. When you include principal reduction, the total return in year one is a robust 11.68%. The rent gap. Currently, the ownership is experiencing a $44,000 loss to lease, which represents roughly 7.3% of the potential income. Capturing this in the primary thesis of the investment. Chapter 4, underwriting logic. Trust through transparency. So we have underwritten this property with a conservative consultant mindset to ensure these projections are realistic. Expense ratio. We are underwriting the property at an expense ratio of 31.4% currently, which increases to about 32% in year 1 to account for professional management and tax adjustments. Tax reassessments. We have accounted for the tax pop post-sale, moving the real estate tax line from $23,000 to $33,000. Professional management. We've included a professional management fee that scales from 7% to 8% to ensure the property is run as a top-tier institutional asset. Maintain the asset. Our model includes $5,000 in annual reserves and $12,000 for ongoing repairs and maintenance. Financing assumption. Our model assumes a 70% loan-to-value (LTV) with a 6.25% interest rate on a 30-year amortization schedule. This leaves a healthy debt coverage ratio of 1.51 in year 1. Chapter 5. Market comps, proving the value. Is $134,000 per unit a fair price? The market data confirms and is defensible at every point. Sales comparables, local averages for multifamily sales around $122,000 per unit. However, many of these comps are much older vintages such as the 1969 and 1970 builds. Price per square foot. At $198 per square foot, this property is priced below the submarket average of $206 per square foot. Proven rents. Our current one-bedroom rents are $1,138. Nearby comps are achieving $1,897 for units that are significantly smaller. Proven rents for two-bedroom. Our two-bedroom units are currently rented at $1,202. Other comps in the area are getting $1,200 for similar units. Pro forma validation. Our project rents of $1,360 or $2 per square foot align with the higher-end performers in the Norfolk Ocean View submarket, especially given the 1987 construction date. The investment thesis for 171 and 179 West Balview Avenue is simple. You're acquiring a 1987 vintage asset in a market with a permanent demand driver and billions in regional infrastructure investment. You're stepping in at a 6.75% current cap with a clear 12-month path to 7.8% yield by professionalizing management and capturing the existing loss-to-lease. The Norfolk market is transforming between the $3.9 billion HRBT expansion and the new casino and surf park developments. This submarket is being re-rated by investors nationwide. This is your opportunity to get in at a price per unit that remains highly competitive. What to do next? Assess the offer memorandum, download the full brochure to review the detailed rent roll and historical financials. Schedule a showing. All property showings are by appointment only. Contact me, Justin Ferguson, the listing agent with Marcus & Millichap, to coordinate a site visit. Please do not go by yourself. And review financing. Note that the first loan of approximately $1.89 million is available for this acquisition. This is a data-driven opportunity in one of the most stable rental markets on the East Coast. I look forward to your questions. Let me know if you want to do a deeper dive in the specific renovation budget or regional employment data. Thanks for watching.